So, Dr. Yellen, at the Credit Suisse Asian Investment Conference this year, the theme is disruption as usual. Do you think U.S. politics are in danger of disrupting the country's monetary policy? And if so, what can we do about it?
I don't think that's going to be an important source of disruption. The Fed has a long history of independence. As Chair Powell has said, it's part of the culture and DNA of the Federal Open Market Committee. Independence is bolstered by long terms for the governors, budgetary independence, support from Congress. So I think it's unfortunate that President Trump is criticizing the Fed, and ultimately, if he were to continue it, my concern would be that it could undermine confidence in the Federal Reserve. But there are many supports to shore up the Fed's independence. It's never been political, and I believe it'll stay that way.
Just talking again about risks, you've flagged the buildup of corporate debt leverage as sort of a significant risk for the economy. Do you see that as the biggest sort of threat of a recession, or could it be a wild card scenario where something happens that we don't expect?
So I am worried about corporate leverage and leverage lending, but I don't think it will be the cause of a recession. I think it's something that could make a recession more severe if something else causes it. And I don't think it will be associated with the financial crisis. But we have seen a very significant buildup in corporate debt in lesser-rated U.S. corporations. The underwriting of that debt in many cases is weak, and there are very weak loan confidence. I think that the losses on that could be severe, and if the economy falls into a recession, I think there could be a wave of corporate bankruptcies that could lead to layoffs, a decline in corporate investment. By and large, the debt is held by real money investors, by pension funds, and by other investment vehicles that themselves are not highly leveraged. So I think that makes it less of a financial risk.
You've also spoken about climate change. What do you see as the biggest potential near-term disruption as a result of that in terms of markets and economies?
Well, I think firms are beginning to realize that climate change is a very severe risk, that there can be stranded assets, that it will have significant effects on weather events, on crop yields, on flooding, on economic growth, possibly on mass migrations over time. Firms are beginning to factor that into their estimates, but if you look at aggregate estimates by economists and for example, the London School of Economics, it may be that firms are underestimating the risks and costs relative to that, but it's also going to create some opportunities, and I think that firms may be underestimating the opportunities that climate change will create for sustainable investments, green bonds, sectors that will benefit from new technologies and policies to deal with climate change.